Do you have an options portfolio, but you're not sure how much money or capital to allocate into different zones or sections? Well, in this video, I'm going to give you some insight into that. Now, if you don't know me, I'm Sasha, the options coach. I've been teaching people to trade options over the last 10 years, and I've coached over 400 people one-on-one on a private basis to trading options. Now, let's take a quick peek on how much money you should use into your different sections if you're looking to look at your portfolio, because a lot of people think, hey, I got to use 2%, I got to do this, I got to do that. Really a little bit different than that, okay, than what the books really say. So if we look at portfolio budgeting and we look for how things are done, what I'm going to share with you is really how much capital should you use in these different zones, because what I like to say is it depends on your level of ability, because some people, they know how to trade covered calls only. Other people know how to trade just single options. Some people, they know how to trade vertical spreads, iron condors, and so forth. So it's going to vary person to person on their ability. But in general, for most average people, I'm going to say if you're starting out and you're not fully profitable yet, I would say start with about 50% of your capital could be active positions. Okay, so that's 50%. So if you've got $10,000, you might say, okay, 5,000, I'm going to actively deploy that, meaning it could be verticals, it could be covered calls, it could be iron condors, whatever your normal activity level is. Now, the other 25% could be held on the side for adjustments, meaning tweaking, if you like to tweak and adjust. And another 25% could be for new opportunities for holding things back. And that's where your money is used, because now you're really only deploying about half, because this is like a bank account. You don't want to fully utilize everything and run it down to zero, because if a new opportunity comes, do you want to have some money or availability there? In most cases, yes, you do. So this is why you would want to hold some back. Or if, let's say, you have to adjust the other active positions, then again, you do want to hold some of that money back. So that's how I would say allocating it would be a smart approach. Now, obviously, in the active positions, you could have multiple strategies in there. There could be multiple iron condors, butterflies, verticals, single options, whatever you're doing. That's irrelevant. The point is these are continuously active positions that you repeat on a week-to-week, month-to-month basis that you're kind of in there. Now, if you want a little bit more of a detail orientation, here's another way to also think about it. If we're looking at duration of these trades, sometimes you could look at it this way, where I have things that are long portfolio, where things are maybe trending to the upside. It could be positive delta. Things that are maybe more bullish in nature, you could allocate a little bit more or heavy in that way. Things that are more non-directional could be another way, like an iron condor, a butterfly, a calendar, double diagonal. Those things could be non-directional. And then speculative. Now, in a chunk of these, out of each one of these zones, you'll still want to have a portion allocated for new opportunities, just like before, and a portion of that may be allocated to, again, adjusting. Okay, and that would be the same for these long portfolios. So again, a part of that could be for new opportunities, and a part of that could be for adjusting. Okay, so all of these have their own little departments or divisions. Okay. And then if you want to get into a little bit more of a detailed structure, there could be stuff like, well, 0DTE could be part of speculative, or day trading could be part of speculative. Long portfolio could be some verticals, or even you could have diagonals for a long portfolio. So you could look at it in this way as well. Anyway, there's just like with penny stocks, there's nothing wrong with penny stocks, but it could be in a smaller chunk of your portfolio. What a lot of people do when they share penny stocks or ideas like that, they allocate it towards their full portfolio, but it's not the way it should be. So anyways, this is how we structure kind of like a healthy portfolio for most people. You could fine tune it to your personal needs, risk tolerance, and so on. And I've got some other great sheets for this on portfolio building and looking. If you're interested in them, the PDFs, just drop me a quick note down below. Be happy to send it to you. And other than that, enjoy the day ahead, enjoy the week, and I hope you found this helpful. And I'll see you in the next video. Take care.